of course, when you go around the villages, you have this paradox of, you have an economic growth, but then people seem to be regressing on the other side. So then the focus is on this bottom-up economic plan, where you now drive economic sustainability in a manner that is inclusive for all and creates opportunities for all. And a lot is happening around that economic space to make sure that, we build resilience within our economy so that we can absorb these shocks if they happen in future, and then you do not leave anyone behind. So basically, of course, I think you've also seen tomorrow we will have the chief guests with us tomorrow, the CPA CS body, and of course as accountants as well, both in private and public practice. So as stewards of financial resources, so accountants have a very unique responsibility to integrate sustainability into the work that we do, and this will involve recognizing the long-term sustainability or impact on our economic decisions that we take, be it on the environment, be it on our people, and be it on the economy. So the urgency of this climate change, resource depletion, and social inequities calls for immediate action, and we must rise up as accountants to challenge and contribute to solutions that promote resilience and sustainability within our communities and organizations that we all lead. So, ladies and gentlemen, so from a treasury perspective, so we view public investments as not just merely processes of directing expenditures, but then as very powerful tools for driving economic growth, promoting social equity, and protecting our environment. And we are now focusing on addressing some of these pressing challenges by strategically aligning our resources in a manner that prioritizes sustainability. And in some of the areas where you see this happening, number one is around the infrastructure development. So investments in infrastructure are vital for economic growth and social well-being. And we have prioritized a lot of renewable energy projects in Kenya, notably the Lake Turkana wind power project, which this initiative has enhanced energy access and significantly reduced our carbon footprint. And as you may be aware, so far our grid is now 93% green. And there's a focus to now push this with additional investments to make sure that within the next 5-6 years, by 2030, then we should be at about over 99% green on our grid. And we've seen that even on the kind of investments that we are aligning ourselves to are all towards sustainable measures around towards green transition. On the other hand, you have a number of social programs that have been put in place, which I've already mentioned two of them, around the education sector, around the health sector, and of course we continue having the social safety net as well to make sure that those who are vulnerable in the society are also well protected. And on the other hand is the issue around building up sustainable agriculture, which is basically a cornerstone contributing about 25% of our GDP, and focusing on green measures and sustainable farming practices becomes very important. And on that span, we also working on sustainable urban development. So when you look at the housing agenda, the affordable housing agenda is to address this urbanization issue. We all know by around 2030, more than 60% of our population will be in urban centers. And for us to make sure that everyone is secure and that the resources which are available are well optimized, then we need to plan around the housing program. So, ladies and gentlemen, I think mine was to just give highlights so that I could set the stage for our main guest who will open this conference. And to this end, I would wish to encourage all of us that we embrace our role as change ambassadors, as accountants. Let's commit to leading with integrity, embrace innovation, and a shared vision for sustainable future. And as I conclude with a quote from Robert Swan, where he said, "The greatest threat to our planet is the belief that someone else will do it. There is no other person who will do it. It is us to do it. For this to happen, it is up to us to make it happen." So let's embrace our role as change ambassadors. And to that end, allow me, it's my pleasure and to now invite our guest of the day, the Honorable Francis Kimani Kuria, to So I call the chairman back to stage so that he can take up from there. Thank you very much.
Let's give him a round of applause. CPA Lawrence Kibet is the Director General, Portfolio and Investment Management at the National Treasury. So he will be speaking to us more about sustainability within the week. But I want to take this opportunity now to just recognize some of our members who are in key positions, and they are within the House, and then we should be able to proceed. One is, let's recognize, allow me to recognize CPA Hussein Barjan Hussein, the CEO of IBC, is joined us. Piga makofi, si mnajua IBC. We fought our battles, and we were given a chance to be on the selection panel. And FCPA Tanui will be representing us in the selection panel of IBC commissioners. Very hopeful that at least an accountant is heading that particular organization, and we may have an accountant as a commissioner, God willing. Let's also recognize in the hospital health industry, CPA Tosif Dean, the CEO of MP Shah Hospital. She's in the house. Very important. So you don't have to be a doctor to be a CEO of Kenyatta National Hospital. It is given an example by MP Shah. We have several chapters across the globe. Our members are across. There's the UK chapter, there's the America chapter, Australia chapter, South Africa chapter, and Canada. Today we are blessed to have one of our members from the Cayman Islands, representing the Americas chapter, CPA Geoffrey Mutua. He will be speaking to us. Those who want to go to America, the Caymans, and all those chapters, you can have an opportunity to speak to him. May I take now this opportunity, we shall keep on recognizing our members in various fields, to now take this opportunity to welcome our keynote speaker, the Honorable Francis Kimani Kuria, the Chair of the Finance and National Planning Committee of the National Assembly, to speak to us.
He is a trailblazer in leadership and financial governance. Since his election, he has championed transformative legislation through his roles on key parliamentary committees, leaving an indelible mark on the nation's fiscal and developmental policies. Please welcome MP for Molo constituency and Chair of the National Assembly's Departmental Committee on Finance and National Planning, CPA Honorable Kimani Francis Kuria.
Thank you very much, fellow accountants. allow me to ride on the already established protocols. Good morning, extinguished fellow accountants. You know, Council Chairman, when you mentioned it is International Men's Day, we rarely remember this day. When it is a Women's Day, it's something because we don't necessarily want to remember, but we are forced to remember because of other circumstances. But now, CPA Catherine, who gave the keynote speech on behalf of the CEO, was telling me that, and remember, this is not Equatorial Guinea, so we're not. It is a privilege to address such a distinguished audience of financial experts, accountants, and thought leaders. Let me commend the Institute for exceptional leadership in advancing the accounting profession and fostering crucial discourse on matters that shape Kenya's economic trajectory. Today, we focus on fiscal sustainability, a subject that sits at the very heart of our nation's economic progress. It's not just an abstract goal, but a practical imperative. As John Stuart Mill would put it, the worth of a state in the long run is the worth of the individuals that compose that state. But let us try to understand what this fiscal sustainability is. Fiscal sustainability ensures that governments can meet their current and future financial obligations without overburdening taxpayers or compromising economic growth. It's about balancing today's needs with tomorrow's responsibilities. A concept that you will all know is rooted in intergenerational equity, as you'll find in the book of Theory of Justice by John Rawls. Rawls reminds us that a just society must balance the needs of its present members with the future members. And for Kenya, this means ensuring that today's fiscal policies do not saddle future generations with unimaginable debt or inadequate public services. In the long run, a misleading guide to current affairs, I was trying to understand the difference between long-run plans and short-term plans. So, and this took me to John Keynes, who infamously said that in the long run, we are all dead. Which is true. In the long run, we are all dead. But I was also reminded by Richard Equivalence, who emphasizes that the need for debt finance productive investments rather than consumption. And in the absence of our own local mobilization of resources, then we are going to John Keynes where we are saying, since in the long run we are all dead, why don't we all borrow to finance all our current development and consumption expenditures and leave the others to take care of it? Because after all, as John Keynes said, in the long run we are all. Prudent government spending, therefore, lies in the heart of fiscal sustainability. Allow me to outline 3 critical principles that have been inspired by research and study. One thing we must do, and I mean we, including myself, I'm also telling myself, is prioritizing our spending. If you remember your economics class, Pareto efficiency talks about resources must be allocated where they yield maximum societal benefits. And this means prioritizing healthcare, education, and infrastructure, which are sectors that has the highest return on investment for both the present and the future generations. We should never spend the money we don't have. Another principle is efficiency and accountability, where governments must adopt private sector principles like efficiency and transparency. Every shilling must be spent to produce measurable outcomes. If public funds were people, then they would ask, if I'm going to be spent, can I be at least spent on something meaningful? This is a principle that lacks in public expenditure, where public expenditure is not based on outcome. Like my good friend, the Director General of Government Services, was saying, why we replace P for profit with P for with outcome, where government expenditure is not based on outcome. It is not about, it's not like the private sector that we talk about efficiency and transparency. And that is why, as I speak to fellow accountants today, as we go back, especially those of us that work in government institutions, we must make sure that just like in the private sector, there is efficiency and transparency of every shilling used. As that shilling would ask, if I'm going to be spent, at least let me be spent on something useful. On debt management, borrowing, ladies and gentlemen, is inevitable, but it must also be strategic. Debt should be used to fund infrastructure and economic growth rather than recurrent expenditure. Borrowing is like renovating your house. No, borrowing for development is like renovating your house. Borrowing for consumption is like renting out your own kitchen. Or maybe close home as we near Christmas. Borrowing for consumption is like taking a loan to buy fireworks. Then after the fireworks are expired, you are left in the dark. Taxes are a price we pay for a civilized society. But that price must be fair and must not stifle economic growth. And that is why we must do three things. We must broaden our tax base. The reason why all our pay slips are crying is because we have constantly raided the already paying taxpayers, where 80% of our taxes is contributed by 20% of our population. And therefore, we must find a way of using technology, of making sure that everyone pays their fair share of tax. That is the only way we must ensure equity in our in broadening our tax base. We kicked off public participation on 6 pieces of law that I'll be speaking about a little later. And one of the things we started yesterday at Isiolo, and the people of Isiolo were saying, we must simplify the tax language. Tax language cannot be a language that's only understood by accountants. They were asking us, these laws that you've brought, tax abandonment, relief, statutory deductions, penalties, and tax amnesty, all these terms, we must find a way of getting a language that a Mwananchi who is not an accountant can understand. And that is where we seem to have really failed. We do not have a language that speaks to Mwananchi. So we must simplify this language so that we speak it to people that understand. I find many people that say, I want to pay my fair share of taxes, but I don't even know which taxes these are. I don't know where I should pay. I don't know what is vatable. I don't know what is not. I don't know whether I'm on the threshold. I don't know whether I'm on TOT. So we must find a way of simplifying this language to our dear Kenyans so that we don't have to overburden them with penalties and interest for things that they don't even understand. The 2010 Constitution brought to us devolution. Every time there is something wrong happening in the country, we're blaming it on the national government. But you forget that our 2010 Constitution gave us 48 governments, 1 national government and 47 county governments. And we must ensure the way we scrutinize fiscal discipline of the national government, we do the same to our counties. Yesterday I said, there is a problem in healthcare in our country. And when we went to Isiolo, the people of Isiolo were telling us, how do we pay taxes? When I go to the hospital here in the dispensary, there is no medicine. And they were saying it is because you, I don't know why they call me you, like I'm National Treasurer, which they should be directed to the people like Kibet here and PS and CS. I say, you have not dispersed funds to counties. When I close a check, I told them, actually, The national government, national treasury is up to date on its county government equitable share disbursements up to October. And we're in November, so we are not yet in November. But how do we make sure that we put our counties to check? They must also ensure they mobilize their own revenue mobilization. We have a lot of opportunities for counties to be self-reliant. Progressive devolution, like in the United States of America, we have states funding themselves. So this over-reliance on equitable share to fund county governments, we must find a balance. There are counties that need help. There are some that should improve to make sure that they're able to fund their own expenditures. We must also ask ourselves, if we pass such a successful constitution, why do we still have budgets in national government and the same thing in county governments? We should have devolved functions, not be part of the budget of the national government. And should have non-devolved functions, not in the budget of the county governments. And one of the things is to make sure that if we, for example, e-procurement, and we have those approvals being done by the control of budget, before that payment is made, the question is this a county function or is it a national government function? To address some of these challenges, the National Treasury and my committee, the Department Committee of Finance and National Planning, have come up with 6 proposals. One is the Tax Laws Amendment Bill. What does it address? Pensioners, if you decide to retire at the age of 55 because of health reasons, your pension is taxed. But if you retire at the compulsory age of 60, your pension is not taxed. What does this mean? That we still have a lot of people who are incapacitated to be in service, but they do not want to retire because that pension is going to be taxable. So the Tax Amendment Bill wants to make a pension withdrawals even before you're at the age of tax to be tax allowable, just like the pensions you have when you retire. We have all these statutory deductions that can come to our pay slips. It has resulted to a double taxation on our income. Because you have basic, you have allowances, the only thing you get is a relief, then pay. So we are saying that because these are statutory deductions, they must first be allowable before you pay your pay, so that you do not have your pay, your statutory deduction, and again the same thing has been taxed. The pension that is allowable now for payee is, I think, up to 24,000. So the Tax Amendment Bill is increasing that to 36,000 shillings, or 360,000 shillings a year, among many other raft measures that want to make sure that there is more disposable income available to our Kenyans. The Tax Procedures Amendment Bill, among the many things, is simplifying how you get your overpaid tax allowable. We passed in the Finance Act of 2023 allowing you to claim other tax heads on your outstanding tax with KRA. But this is going to simplify. The amendments being proposed on the Tax Procedures Bill is going to simplify even that further. Of course, and extending the tax amnesty that expired on 30th of June to 30th of July, to 30th of June next year. Of course, the proposal is on the bill. It's saying that it is all outstanding interest and penalties up to 31st of December 2022. And now, from the views of Kenya, we are saying that needs to be extended to all interest and penalties that have existed up to 2023. The Business Laws Amendment Bill, among many things, is hoping to do one thing. If you take a loan in the bank, banks are regulated through the Central Banks Act, and therefore their conduct, their interest rates, and everything is regulated by CBK. If you take from a microfinance, it's regulated through the Microfinance Act. If you take a loan from your Masibu Sacco, that conduct and that business is regulated through the SASRA Act. What about especially those people at the bottom of the pyramid who take those programs that we call buy now, pay later programs, ile lipa mdogo mdogo, like the ones our boda do? We all know our brothers and sisters who have taken a loan. They paid a deposit of 10 or 20,000 for a boda. They've been paying 300 shillings obediently for 2 years. Just when they're about to complete their payment and they default one payment, their bike is taken back. Because those businesses, the non-deposit, non-digital lenders are not regulated in any law in this country. And now the proposal in the Business Laws Amendment Bill is now to bring them to the purview of the supervision of CBK, so that in the same breath that the banks and the SACCOs and the microfinance institutions are supervised in the way that they lend, is the same way these other businesses are regulated. We have also an amendment to the PFM Act, the Public Finance Management Bill number 3. This is seeking to do two things. One is what the Committee of Finance and National Planning have been trying to do for the last 2 years. I promised you when I spoke at the conference, SIPA conference 2022, that we are going to ensure that government migrates from cash to accrual accounting. There is no way why we need to close our country every 30th of June. In fact, most of the misappropriations that happen in government happen towards the tail end of the year. Because people know pesa isipotumika itafanya nini? Itarudi. Worst of all is what happens at the change of every regime. When a governor comes in, after 5 years, the first thing they do is to form a pending bills verification committee. The same thing with the national government. When there's a change of regime, the first thing the new regime does is form a pending bills verification committee. Why do we need to do that? We just need to make sure that if the expenses are not realized at the end of that year, it's easy to carry them forward for the next year. As we speak, up to when we had now the implementation of the pension superannuation scheme with National Treasury, any other pension that we owe to our pensioners is not known. And that is a fact. So it is a budgetary allocation that is made to pay our pensioners every year. Until I think the superannuation scheme started in 2021. That's when now that started. Why do we need to do this? We should just make sure that these pensions, when we have a accrual accounting system, they get to be realized in our books and don't have to go trying to ascertain how much pensions do we owe, how much pending bills do we owe. Of course, also hopes, 3 years ago, I think it's 3 years ago, National Treasury and Parliament changed the law on debt, changing it from to a nominal figure to a percentage of GDP in present value terms. The only problem is there was no specification of the date of implementation. So now this law is now seeking to have that done in law and saying that this implementation will come into effect in 5 years. They also have another Public Finance Management Bill, number 4 of 2024. We've seen some particular functions being transferred either from national government to county government or from county government to national government. But what is sad is that the transfer of those functions do not have the transfer of funds for those functions. That's why you have counties that are mandated for some particular functions, but the budget still lies with the national government. The staff still lies with national government. So this law is now trying to enhance that when functions are transferred between the two levels of government, they must be followed by the transfer of funds. And lastly, bill number 6 is the Public Procurement and Disposal Amendment Bill. This wants to make sure that it gives preference to our local contractors and government contractors by making sure we raise the minimum. The current law talks about below threshold of 500 million shillings for local contractors. Now that we hope to increase to 1 billion shillings, so that this privilege, it's not a privilege per se, but this business that are doing in government, in the least, we should make sure it goes to our other Kenyans. Because when a business goes to a business company, to a Kenyan company, it means we are creating employment to those people. It means we're even growing our taxes, because payroll taxes, corporation tax, and all this goes. We are also growing our economy. We are growing our technology. We are growing our innovation. We also said, in the event that that particular contract is do not have capacity in Kenya, then if a foreign company then has to be allocated that particular contract, they must make sure that 30% of that contract is locally owned. What does this do? We still have services, especially in the service sector, that are being done by companies that could competently be done by Kenyan companies. And that's why, if you check now, every Thursday, if you go to auctions page, we have out of our business being auctioned. Because some countries are so ahead in their competitive advantage that when now we put our companies and international companies at the same level, they can't compete. Some of these companies are subsidized by their home countries. The loans that they get to do that particular project in their whole country. For example, for Chinese companies, when a Chinese company wins a contract in Kenya, they're able to access a cheap loan from their home country, unlike what happens to our home country. So we must make sure that we put on the same level so that we grow our local companies, we grow our local manufacturing. So these bills, we are hoping, and that's why we kicked off public participation. This time around, please, the last time we had this conversation ended up in personal losses for some of us. Even when the things that Kenyans had said they didn't want had been removed from our report. But what we've come to establish is there is also a trust deficit between taxation and expenditure. People are saying, how do we make sure we see the result of what we're doing? But unfortunately, the discussion around taxation is not popular, but is in everyone's lips. But let's come to the question on expenditure when you are scrutinizing the budget. I was challenging ISPAC, every time we call them on tax laws, they make very good submissions. All the audit firms, PwC, Deloitte, they all come here. They have analysis and they publish them and they talk to them. But when the estimates are printed, the discussion is not as much. And yet, this is going to fund the expenditure. We must encourage as much a robust conversation we have on revenue like we have on our expenditures. That is the only way to ensure that we have fiscal discipline and fiscal sustainability. So ladies and gentlemen, this fiscal sustainability is not just an economic necessity. It is a moral obligation to our children, to our future generations. As policymakers, as professionals and citizens, let's work together to ensure that Kenya's economic foundations are strong and enduring. Adam Smith reminds us that little else is requisite to carry a state to the highest degree of opulence than peace, easy taxes, and tolerable administration of justice. So let us commit to peace in our fiscal policies, fairness in our taxes, and integrity in our governance. I remind you, in the tax procedures amendment bill is when you appeal through the tribunal for your taxes, and before you appeal, the tribunal has given a verdict, so before you appeal, they will make sure the judgment is on Friday and slap you with an agent's notice on Friday. And now between Friday and Monday, you cannot appeal, right? So we've now increased that in the tax procedures amendment bill to the period between when you lobby when you pledge that technical term, when you do your appeal, to exclude public holidays and weekends, so that there is enough time for fairness in our administration of justice. In my closing remarks, I will tell you that the simple truth is that fiscal sustainability is a diet that ensures our economy not only strives, but thrives. So let us make choices today that the future generation will thank us tomorrow. Thank you, fellow accountants. Thank you, ladies and gentlemen. So I'm told I'll take questions. I'll take questions.
Thank you very much, the Honorable CPA Francis Kimani Kuria, Member of Parliament, Molo, and Chair of the Departmental Committee of Finance and National Planning of the National Assembly. Tumpigie makofi tafadhali, tafadhali. Now, being an area that is a bit exciting and important to the nation at the moment, there is public participation going on the three laws that have been proposed. I request that if you have any question, we will take, and Johnson Mwakazi help us to take up a few questions here, physically, Pride-in 1 and Pride-in 2. He can be able to clarify a few things, and then we shall be able to close that end. So I give it to you, Johnson Mwakazi.
Thank you so much, Madam Chair. We'll start very quickly with Pride-in 1. Pride-in 2, please be on standby. We'll have 2 questions. Please make sure that you get us just 1 question per delegate within less than 1 minute. Pride-in 1, if you're ready. Pride-in 2, please be on standby. And Sarova here as well. We'll also have questions from the virtual platform. 2 questions as well. And finally from menti.com. But for all your questions, please make sure that you utilize the Menti platform. Pride-in 1, are we ready? Go ahead. Your name?
Hello, this is CPA Donditi, Kenya Wildlife Service. I have a question to the Chair of Finance Committee. Why is it that housing and sheep are calculated on gross and not basic, as is the normal with other statutory reductions?
Thank you, CPA on DT. Question done. Another second question, Pride-in 1.
There's a hand on this side. So thank you. The first question is on the calculation of shisha. So let's listen to the next one.
Thank you very much. To Honorable Kimani, thanks for the wonderful presentation. My name is CPA Eston Okinyi. I'm the Secretary and CPD Convener of ESPAC Nyanza branch. I have got 2 questions and I'll go very quickly. Number 1, do you really think it is the language of taxes that is complex for taxpayers or Kenyans to understand, or it is the taxes that are too many for Kenyans to be able to understand them? Because currently, as we speak, we have almost more than 16 taxes. You start with the VAT, pay as you earn, housing levy, withholding tax, withholding VAT, capital gains tax, digital tax, TOT, rental income tax, advance tax, and all those things. So don't you think as Parliament, you need to be able to let Kenyans to reduce some of these taxes so that Kenyans can be able to understand them? Because I think it is not the language that is difficult for them to understand. Number 2, I would like to know how accrual accounting is going to solve the issue of misappropriation of public funds by the public officers. Because here is one area that I think you've also failed Kenyans in terms of ensuring that you hold people accountable, especially when they commit some of these crimes at the end of each financial period or when there is a regime change. You just need to hold these people accountable for Kenyans to see the value for money. Thank you very much.
CPO Okinyi, thank you so much for your questions. Thank you so much.
Back to Mwakazi, we had 2 slots unless we had more than 1 question. How many questions so far? We have 2?
We have actually 3 questions. Thank you so much.
Okay, indeed. Good. Another hand?
No, actually we are done with the Pride-in 1. We'll move to Pride-in 2 now.
Okay, thank you.
Let's move on to Pride-in 2. 1 question within a minute. Start with your name, please. Go ahead. Pride in 2.
Can you hear us, Mwakazi?
Yes, we can. Yes, we can. CPA Rispa, go ahead.
Thank you so much. My name is CPA Molin Otieno, and my question to Mr. Honorable Kimani is that the government is very strict on education of our children. A child must take approximately 1 year in one class before moving to the next grade. And how comes with the taxation, we don't care about our citizens? For example, we started with NSSF, that was last year, that was almost doubled. Before we actually absorb and adjust our systems, I believe NSSF is for our savings, but now as a retiree, will I enjoy that NSSF in future if I don't take care of my life at the moment? Within a short time, the housing levy came, and it's like a double taxation, because we are being told that you pay as you earn, but with the housing levy, you don't earn. You pay taxes on the housing levy, it is deducted 1.5%. Before the child finishes that grade and move on to the next grade, shift is already in. In the month of October, most of the employees felt it. Somebody told me that I felt like locking myself in a room and just crying loudly because we are taking all that somebody is supposed to take home. The take home for the employees is drastically reduced. And after paying these taxes, we don't get reward. You pay that taxes where you stay, you still have to engage a private security firm to take care of you. You still have to pay the house that you live in. You still have to pay the double fees because the housing levy also affected the employers. So the employers also has to increase their cost of operations. Thank you.
Thank you, CPA Otieno Rispa. Another question, CPA Rispa.
Thank you. Thank you, Honorable Kimani. I'm CPA Kenneth Koskei. I have 2 questions to pose. One, about the tax base, or you've addressed the issue of broadening the tax. Now you say 80% of tax collected is being charged to 20% of the taxpayers. I agree that. But the question is, have you considered increasing their salaries? Number 3, you also embrace compliance. Government policies are addressing the issue of compliance. And we have an issue pertaining a third rule in the payroll sector. See, for the case of shift, you introduce 2.7% of cross. Unfortunately, most of the 70% of the employees' payslip are non-compliance in terms of a third rule. Now, what is your take on that? Finally, you've raised an issue of accrual basis. Someone has talked about accrual basis. How soon are we going to graduate to accrual basis to solve the question of accountability? Thank you.
Let's take our last question from Pride in 2.
Good morning, CPA Michael Musila. My question again, I'm directing to the presenter, is about the tax base. He has talked about us collecting tax from only 20%. So my question is the approach that they are using to widen the tax base, adding more taxes on the 20% taxpayers who are already paying, or would they consider rolling out programs that are going to add to touch maybe another 10%, and then they offload the burden, because the taxpayer is really feeling hit in terms of the taxes that we are already loading. So if the idea is going to be loading more taxes, I'm sure we are not going to get from the mess that we are in terms of the borrowing and all the financing of the national development.
Thank you, CPA. Back to you, Mwakazi.
Thank you so much, CPA Rispa. We come to Sarova. 2 questions, very quickly. Your hand up, a microphone will be given to you. Start with your name. 1 question, please. Go ahead.
Hello. Yeah, my name is CPA Obed Nyambeko. Just 2 questions. So, I think the challenge we are seeing is the lack of stability of our tax laws. So, just, you know, we have the usual Finance Bill, Finance Act. Now we then have the amendment laws, and then all of us know what's been happening in the court system. So that, laws are passed, rulings are made, business have to change really at a very, very short notice. So my issue is, when will we actually have the tax framework being implemented to give business time to plan for their taxes and levies? Because what we have now is really quite a big challenge to businesses. And the other question, which has been actually been said, and maybe just to see the gravity of the matter, is what we see as an unfair burden of the 2 million or so salaried Kenyans on the endless taxes and levies that are being imposed on them. And I think my ask is really to say, is there something that can be done, for example, reduce the top income tax rate to 30% to align it to corporate income tax? That's actually in the tax framework that was there. On the issue of affordable housing levy, when it was introduced, this law, when it was introduced, there was a capping. And that time it was came under saving, but there's no capping now, it's just there. And the issue of SHIF, also no capping and all that, and people are feeling the pinch. So at least find a way of capping that and, reducing these many, many levies that are falling on employed people. Thank you.
Thank you so much. Final question from Sarova. Go ahead. One question, please.
Thank you. My name is CPA Florence Biria from Coast Branch. I have one quick question to Mheshimiwa. You talked about giving business on the aspect of procurement to local companies as well as small businesses, which is a good thing. And I'm looking at it from the perspective of the finance bill that which was trying to impose certain taxes on imported items. So if you want to support effectively local businesses, but then you are adding more taxes on imports, and we know that we have not really supported the production side, including the production of inputs, even if they are manufactured or they're even grown, whichever way they're produced. So I think this is not going to help the Kenyans. It's going to give mileage because for those who are making the laws, but the Kenyans will not really feel it because they will import the expensive inputs, and then at the end of the day, the ultimate final product will even be more expensive than if it had been produced, it had been imported as the final product. Currently, we have very many Chinese centers. I actually saw one the other day when I was driving past Kongwea. There's a new Chinese center. And I understand that the local business people, they go buy there and then they come and sell, as retailers, selling to the consumers. Isn't that making it more expensive if those items will be taxed more and then Kenyans go buy, then they are given the business by government and other entities? I think for me, my proposal is we make supplementary laws if you really want to boost the business so that you spur production, because I think our problem in Kenya, our production levels are very low. We cannot make ourselves rich by just doing business without doing production. So if the legislators, you can focus on production, I believe that will help this country be able to be self-sustainable in production and also in supplying what we are giving the business to supply in terms of procurement. Thank you so much.
Thank you so much. Final round of questions from the virtual participants. This is Zoom. First question, Naftal Nyariki says, thank you, Honorable Kimani. If the counties pressurized to raise more revenues, are they not going to the same taxpayers, hence a proliferation of taxes? Second question. I disagree with Honorable Kuria. The problem is not revenue collection, but corruption and misuse of public resources. Why doesn't the government address the expenditure question? Back to you, Chairman.
Thank you very much, Bwana Makazi. The questions are so many, and we've limited the time, we limited the people, but the Honorable Member of Parliament will be able to address some of the questions and keep some of them. There will be more clarification from the CS National Treasury tomorrow. But I was reading an article the other day, and I do not agree with it, but it was written by Professor Vincent Ongore. He teaches at TUK University, Technical University of Kenya, and is a former chief manager of KRA. And he said that between 2001 to 2022, 10 years, KRA was headed by accountants Sha Munge, John Paul Munge, MG Waweru, JK Njiraini, CPN Kithi Mburu, all were accountants. But he made a comment and said, in those 10 years, the very, very gentlemen who were accountants had a wrong impression that accountants had the knowledge necessary in tax administration. Accountants who are here and out there, was this statement right? From Professor Vincent Ongore. So I would want to allow the Honorable Member of Parliament and Chair of Finance and National Planning Committee, Honorable Kimani Kuria, to be able to respond to questions. How I wish we had the Honorable CS Deborah Baraza to respond on some of these questions on Shisha, and all this, because there are so mixed questions here. Mheshimiwa may really get to, and also National Treasury to respond to some of the issues, but we've lined up these people, so we will be able to get the answers. But we need to do participate in public participation as accountants to be able to raise some of these issues to be addressed. Thank you.
Thank you, Mr. Chairman. I will attempt to respond to questions that will lie in the mandate of the Committee of Finance and National Planning head, and leave the rest to my able Cabinet Secretary, CPA Bande, who, by the way, I hope you inform the audience. We interchanged. He was supposed to come today, myself tomorrow, but then he's signing his performance contracting this morning. So I said, let's reschedule, and then I come, and he comes tomorrow. It's a good thing that I came today, and then he answers the difficult questions tomorrow. I have questions from CPA Makinyi, CPA Otieno, CPA Koskei, and the rest I was not able to catch names, but gross or basic or gross, it is a, whoever we look at it, it's a problem. If you charge any tax, when you charge taxes on basic, what will accountants do? Tax planning. So I earn 100,000 shillings. My basic is 70, my allowances are 30. You just reschedule. Make the basic 30, allowances. That is the thinking from government side. But then it brought a problem this way. The long-term problem we have, all collections on basic, like payee, will go to the consolidated fund, CFS. The others go to funds. So it therefore means that in the event that the funds that this money goes to do not achieve the objectives they are supposed to achieve, we strain the amount of money available to offer essential services as government. How to balance that is something that we look forward to having an engagement and see how do we achieve a balance. Because let me say that again. The challenge is tax planning, but even on the other side on government, the payee, the amount of taxes collected on payee reduced, and payee goes to CFS. So that is what goes to finance the budget. These others, like housing levy, goes to the housing levy fund. That fund has a board, goes to a particular function of housing. Chief goes to the SHAF fund, which goes to health sector. So NSSF, of course, NSSF is your saving. That's a different story. So it actually leaves the base, which is supposed to fund government expenditure. It's a conversation we all need to have on how best do we continue, making sure that tax planning there's nothing illegal with it, but making sure how do we achieve a balance on this. Why do we have so many taxes? It is a diversity of our economy. You know, we have somebody who is a practicing accountant who has an office in Westlands and does consultancy services. The same person, the same qualified accountant is employed. So you have now to find a way, if you only work with pay as you want, you'll only get the one who is on payroll. But this other one, you need to have another tax for them, maybe consultancy tax. Withholding tax, and that's why I'm saying also the understanding of these taxes. Withholding tax is not a final tax. We are saying when I pay you, let me withhold 2% of it, so that it reminds you to pay to KRA when you get it. And it also gives the KRA the what do you call it, the eyes that there's this particular transaction that happens. So when you have such a diversified economy, you cannot limit the number of taxes you have, because for example, the Finance Act of 2023 introduced with, I think it was with the holding tax on cryptocurrencies and virtual assets and all that. That led to a collection of this year of, I think it was 10 billion shillings. A completely new frontier that didn't exist. When I was elected in 2017, in 2018 I raised a question to the then governor of Central Bank, Professor Njoroge, on what plans they were making to advance regulations and legalization of virtual assets, all those things about cryptocurrencies and blockchain technology and all that. And say this is a fad that's going to pass away. 6 years later, we have now so many transactions happening around virtual assets. So when now that new frontier comes, you must find a way of advancing your legislation to take care of that. And that's why by the Committee of Finance and National Planning will soon be inviting your views on a draft we're working on legalizing virtual assets in this country. You cannot be collecting tax on an item that is still not legal tender in the country. You must find a way of achieving that particular balance. And Kenya is the third largest user of virtual assets in Africa. The only people ahead of us is South Africa and Nigeria. Yes, on tax base, there are several amendments that, for example, the Committee of Finance has done, including the turnover tax, to make sure that those people who are selling, pay a TOT, to just try to expand the tax base. But also telling KRA, we need to employ more in technology rather than even legislation to make sure that everyone gets into the tax base. One of these things they're doing, which may not be very popular, is integration. Making sure that the transaction around mobile transfer, around banking systems are visible to them, just to form some accountability. On sustainability, on predictability of our tax laws, I totally agree. The accounting profession has also been, the tax consultants have been one of the greatest beneficiaries in the many changing tax laws, because now businesses now have to keep, but it's not fair for business either, because it increases the tax administration cost to them. But one of the things that we did when I became chairman of Finance and National Planning Committee, we used to have a finance bill. Immediately after, there will be a miscellaneous bill. And one of the things that used to come every time was inflation adjustment that would be done through a regulation. So people will not know what taxes they are paying within a year. And then remember, we are also a very litigious society. So the matter goes to court, there are court orders issued on stopping this, on putting it. By the time our businesses are trying to reorganize each other, then, and what we are agreeing with National Treasury is we must hold down on amendments that we are doing on our tax laws. Let us implement them for like 2 years, let them see how they work, and then make adjustments that time. Instead of now bringing all amendments at one time and amending so many laws. And that's where sometimes the confusion gets. Because you are amending so many different acts in one bill. And therefore, even some of the miscommunication get in there. On imports, no country has grown as a trading country. There is no country that grows when you are a trading country. When you import those products from China, from India, you are exporting jobs to that country. And that is a fact. Let me tell you something we did in the Finance Act of 2023. Yes. We introduced excise duty on imported furniture. It was not popular at that time. People were saying, no, furniture is going to be very expensive. Their furniture, like the one you see in hotels, cannot be made locally. 2 years later, see the growth of local manufacturing of furniture that has happened. I was telling somebody, our good friend, Morara Kebaso, should really thank us, because the success of his furniture business is because of policy interventions that we did by making sure. If you checked, like a seat that is very popular even now was the recliner seats. A recliner seat used to cost around 300,000 shillings and was only available from import. Now we have local manufacturers doing it even in our counties. I saw one being made in Molo. Because now when you go to even the big shops, Odds and End, Furniture Palace, all those big sellers of high-end furniture have all now started their local manufacturing of furniture. So a small policy intervention. Kenya, we have so much capacity. Sometimes it sickens me we don't believe in ourselves, of how great people we are. We introduced incentives on local assembly of phones. Now, East African phone manufacturers, I don't know whether I got the name correct, it's a subsidiary of Safaricom. They are the largest manufacturers of phones, of smartphones in Eastern Africa now. One incentive like this, and we are manufacturing phones that we are even exporting to other economies. So Kenya has the capacity, and we must make sure we build that capacity, because no country has grown as a trading company, as a trading country. We must grow our own local manufacturing. So the proposals then, which were adopted and which have not been reintroduced, were on imported finished products, but making it cheaper to import the raw material. So that import the raw material, do local manufacturing, add value, and then you take it to the market. I think I have attempted to, yes, on corruption. We are on the same page. But then, who are the drivers of corruption? For there to be a need of a product or a service, there must be the power of demand and the power of supply. All of us here. I told the accountants this last time, they're not very happy with me. No, insurance, last 1 month. Like every Kenyan will ask a leader when they meet them, and especially members of the executive, kuna kitu naweza supply, mimi naweza fanya supply ya kitu yoyote. And that is the language of Kenyans. So we celebrate people with resources even when we do not care how they got those resources. That is a fact. Even in our homes. I say at Christmas, the one who drives the biggest car, chakula iwezi kuliwa Christmas kabla afike. Lakini yule mwenye anakanga pale nyumbani na take care of mother, huyu hakwange na maana. The girls with the long nails and beautiful makeup, wao ni kutengeneza salad. Hao wengine ni wa kunini matumbo. So that is the reality of our society. So it is a supply. So once we try accepting that, fine, I am not there yet. Let me work hard to get there. And when we see somebody, you ask them, how did you get here? Once we handle the powers of the forces of demand and supply, we are going to cut down this dragon called corruption. I thank you.
Thank you very much, Mheshimiwa. We have taken note of your responses. The balance of the questions, we shall keep them for the CS National Treasury and other speakers as we move on. We've come to an end of that particular session. CEO, you can come up front. Council members up front. Lawrence, come up front. Council members, CEO, acting CEO for now. Let's be able to on board. Come on board, branch. Kitu inaruka. Come, Faria. And Farihin, we need you here for a small ceremony. CPA Tosif, come on board. Then, just a moment, then we should be able to be done. We can mix up.
Profesa Wakindiki, karibu sana. Ladies and gentlemen, a gift of appreciation, makofi tafadhali. CPA Lawrence Kibet, thank you so much for joining us. CPA Honorable Kimani Kuria, makofi yake tafadhali pia. The Lion. Wow. Thank you so much. Many thanks indeed. I'd kindly request that we be upstanding for the Kenya National Anthem as we close this particular session. Let us all be upstanding, ladies and gentlemen. The Kenya National Anthem. Request that we allow our chief guest to leave at the moment. This morning, in 20 minutes, ladies and gentlemen, we meet for the next session. Panel discussion. 20-minute break. Pride in 1, Pride in 2, please be guided. 20 minutes. Sarova, White Sands, just in a moment. Let's allow our guests to leave first. Here at Sarova White Sands, we have 5 serving spots or locations. Please feel free to serve. In 20
Our tea is
minutes,
served at
we start.
Jambo Gardens, just
Asante.
near the gate, and at the Expo Center.
And,
As guided, let's be here in 20 minutes' time to start the next session.
Back
Thank you.
invite you 20 minutes to carry on with the
Founders Gala dinner that will be held on 5th of December. And this gala, we are appealing for you to come and support the University Foundation. Through the foundation, we have set up different strategies on resource mobilization. And specifically, we have an endowment fund to support